All right, so in the first two videos, we identified our idea, what we were seeing in the markets that we wanted to develop. Then we started looking at some criteria that we could potentially start to backtest. So this video is all about backtesting. We're actually going to go ahead and do the backtest. And I'm going to download the backtesting sheet that I've made for everybody to use. And we'll put a link in the description for that. The link's in the backtesting video on the YouTube channel. It's yeah, on there's a link on the Edge Foundry website as well. So I'm adjusting this a little bit. I'm putting a box in over here so that I can start to identify some criteria. Let's kind of define momentum here, what we're looking for. So we're looking for higher than average volume. We're looking for much larger than average price movements. We're looking for some sort of fundamental geopolitical or macroeconomic catalyst. So that's basically what we're looking for when we say momentum. So our entry criteria, that basic criteria that we've defined is basically 200 period moving average, cross over, or or even pull back to the 200 moving average. Our exit that we're going to use just for now, we've already identified it's not the greatest exit in the world. We're going to find something better eventually, is top band of the Bollinger Bands. And we can add to this as we go. This seems like maybe a bit simplistic right now, but we're probably going to end up adding and subtracting as we find out what works. This spreadsheet is going to turn into a forward testing spreadsheet at some point. But for right now, we're just going to go back on the charts and we're going to try and fill out some back tests. Okay, so I'm going to start going in reverse. This is March the 26th. Record the date. The date is nice to have because you're going to go back to this when you want to review or test out new criteria. It's kind of important to have the date so you can easily go back. So entry price here, I'm not worried about getting super specific about the entry price. Just record something and move on. Backtesting is by no means an exact science, and that's why you don't really get an edge from backtesting. But it does provide useful information just as a starting point. Let's call it 9260. Stop loss would be just below. Let's go ahead and call it 92. 92. And the exit price, let's throw in the Bollinger Band. So our exit here I mean, we might call this an exit. Let's just go ahead and call this the exit. Let's call it 94.80, 94.80, and we're going to record this as a win. This profit and loss, if you haven't watched the backtesting video, this profit and loss is based on risking $200. You can see that would have been an excellent win, but it's only our first one. One trade means very little, doesn't mean very much at all. Okay, so we had a trade here, and this is March the 25th. Going to record the entry right around 88.30. 30, my stop loss. I mean, you've probably got to risk at least somewhere down here. 87.40. 87.40. Now let's say the exit was here. 89, we'll call it 89.40. We're going to call that a win. Actually, I think we had another trade here. See, this isn't a good trade, but I mean, this is what we're doing. We're recording trades. This was at 720, so this is potentially something that I might have traded. I'm going to go ahead and record it. We're just recording everything right now. It's not about finding a strategy that wins, and I know that probably doesn't make sense right now. We're simply collecting data so that we then can use that data to find what works so we can get the strategy to win. But we can't expect that in the raw collection phase where we're just collecting raw data that we're going to find something that is very, very profitable. Uh, we also want to know things like this because, maybe you see a lot of this kind of stuff where, you get just this quick spike up and then it comes back down. Maybe you don't like that trade. Maybe that's not something you want to trade. Or maybe we look at this where it spiked through the top line of the Bollinger Band, and even though it's breaking right here, our 200 period moving average, well, it's already spiked through the top line of the Bollinger Band. So maybe we use this as a criteria to not get in. But we'll find that out in the forward testing phase. For now, I'm just going to record the trade. Let's call it 88.60. Here, where do you, honestly, where do you put a stop in? This is a tough trade. Maybe at the bottom of that candle, 87.70, 70, your exit price. I mean, you would have had to exit somewhere probably 89. It's not a great trade, but we need to record all of the occurrences to see what you're realistically getting for a risk to reward, and then if there's ways that you can make it better somehow. So I'm just going to go ahead and record. I'm going to try and get about 50 occurrences. At some point, once we run out of momentum, because remember that crude oil futures have just gotten, or crude oil in general has just gotten momentum. So there's not going to be 50 occurrences here. So what we're going to do is we're going to go back to gold, which, as we discussed in previous video, has had momentum. Obviously, I don't think anybody could disagree that there's momentum coming out of it here, at least upside momentum. There's lots of downside momentum, but that's not what we're backtesting right now. We're backtesting upside momentum. So we'll go into the gold futures chart and we'll just keep backtesting this and see if we can find 50 occurrences to just give us some sort of touchstone, some sort of point to take off of when we start forward testing. So I've recorded my entire for or back test here. I guess if somebody wanted to, they could slow it down and verify all the trades. But while I'm finishing up this back test, I'm just going to talk a little bit more about backtesting. So one common thing that traders get to a point and they start to express out of frustration, does my strategy even work? Does it have edge? Because I've been trading this thing, I'm doing the best I can, and I just can't get consistently profitable. Well, this of course is the work that we put in to try and find out if it is profitable. When you're new to the markets, the first thing that you do is you go out and try and find somebody, probably on YouTube, that can trade, at least looks like they can trade. So they have some good videos, they're telling you things that are exciting, like you're going to catch on to this within 3 to 6 months and you can replace your income and all these things that really align and they're very exciting. And so you get busy working on it, and all you got to do is learn to trade just like them. And they give you some criteria and they're doing live trading, and it seems reasonable that you should be able to do this. But as all experienced traders, especially ones who've become successful, know that after 6 months or a year or 2 years, and you're still not consistently profitable, because virtually no one ever gets consistently profitable from that method, you're asking, does this strategy even work? Well, we talk a lot about scammy fake gurus and that method, but the truth is there's also some very good traders out there who are live trading and they're trying to help you. But you're not going to be able to get consistently profitable even off watching those traders, because a basic market truth, the professionals, successful people, successful traders who've been highlighted in Market Wizard books, different places like that, identify this basic market truth that you cannot trade someone else's edge. Even if they give you all their criteria and what they're looking for in the charts and you watch them, you're just not going to be able to do it. You need to trade the way you personally would trade, according to your risk tolerances and what you see on the charts. The only way for you to develop edge is for you to go through this process of back testing, forward testing, iterating the strategy, and finding out what's going to work for you. That is a basic market truth. So, does your strategy work? I think it's more a matter of you need to develop edge for yourself on whatever strategy that you're going to adopt. And yeah, there are some strategies out there that will just never work. They'll never produce edge, but you'll be able to figure that out. That's why we do this back test. I mean, if the back test comes out poorly, it's only an hour, maybe two of my life to find out that this doesn't work. I need to move on. So another common thing that traders say is that they've back tested, sometimes quite substantially. Sometimes they've gone through a lot of pain to get a back test done. They've back tested 200 or 500 or 1,000 occurrences. They've subscribed to special data sources to be able to get 5-minute charts from like 2006. I mean, these people really want it. They've worked really, really hard at that, and I respect that. It's just too bad that somebody didn't tell them early enough on that backtesting can never produce edge, at least on a short time frame strategy. It's just not going to happen because you're missing the most important variable of all, which is you, how you would trade the chart. That's why edge is developed on forward testing, and you're never going to be able to get consistently profitable off back-tested results. And that's why here I'm really only testing 50, sometimes only 30. If I'm looking at a strategy and I have an idea or I want to test someone else's strategy and I just want to get it done quickly, I might test 30. I mean, it's not robust information, but you will be able to see from it fairly quickly, just generally speaking, does this have potential? Is there potential for this to actually be consistently profitable? And you'll see, I'm almost done the back test, right? I'm going to go over the results. You'll see what I mean more. There's like, you can tell if there's more edge in this that you haven't been able to capture. I'm about to start here. I'll leave it for now and we'll go over the results of this back test. Let's see what we got here. We got 37 wins, 14 losses for a 72% win rate. That's really, really good. Profit factor is 3.09. Uh, of course, this is how much more the strategy is winning than what you were losing. So it's got a pretty strong profit factor. Expected outcome is 0.58, which we've talked about before. For institutions, this is really quite good. But for retail traders, we probably want to try and find a bit more profitable strategy. We're really not winning a whole lot more than we're losing. A lot of our wins are like we got a few strong wins here, but when we're winning a lot, it's just that when we win, we're not winning that much more than we lose. In a lot of cases, we're losing more than what we win. We do have some strong winners here. Can see that the risk to reward we actually would have got here. Sometimes we're getting in that 2 to 3 plus range, but more often than not, we're barely making anything on our wins. So, as discussed in the previous video, the Bollinger Band strategy is not really the strongest strategy. Maybe we want to give up some of those wins if it means that we can get more upside on our winners and we can bring that average risk to reward ratio up a bit more. Um, that having been said, yeah, if we were getting, say, 5 trades per week, we're not winning every day, but some of the days we're getting more than one trade. We're getting 2 or 3 trades. So at zero point 0.5 and we're at 0.58, so if we're doing 5 trades a week, we would still more than double our account. Remember, rule of thumb, this is not promising returns or anything like that, but it's just a general idea that even with the strategy, just the way it is right now, if you trade that with real money and you get exactly what we got in the back test or pretty close to it, you could still double your account annually, which is very, very good. That's a very strong strategy. However, when we take a look at what we saw here is that actually there is a lot of days when we were leaving a lot on the table with this Bollinger Band strategy. This day was a good day. But something like this, like we're stopping or maybe taking profits here, maybe taking profits here, and we ended up running quite a bit higher. There's a lot more profits that we could have taken. So that's one of the first things that I'm going to do is start looking for a way to stay in this trade longer when it makes sense to do that. And like I said before, that might be a matter of taking half profits, but then the question is if you only take half your profits, where's a reliable place to take the second half? Otherwise, you're just going to get stopped out on the second half. So there's more work that can be done with this strategy. Um, the exciting thing about it is that there's a lot of edge here that's untapped. We did this back test. It is profitable. We have actually a pretty decent expected outcome, but there's a lot more profits we could get. So I'm going to do some work off camera and see if I can't find something else that lets us take a little more profits, or maybe it makes sense to tighten our stops a bit more, get stopped out more often, but the winners are a lot bigger. So those are 2 areas. Take bigger profits. See if we can possibly tighten those stops. That'll definitely help us to produce edge. We don't have to do this all on the back test. Now that I've done this back test and I can see it's profitable, there's a lot of advantage to moving straight to into a forward test now because we can all agree that this back test is not robust, as you would say. It's simply just getting to know the strategy a bit. We got some information, right? We got that there's a fair amount of winners here that we took way too early. That's a very important piece of information that we can take into the forward testing. And the forward testing, of course, will be actually how you traded it, so you can also see how you're trading it, if there's a way that you can trade it better. But I just want you to know that to just start the initial back test, to start the process, it's not that difficult. We just go back, we record the trades, see if you can find some sort of positive expected outcome, see if you can identify some criteria, and possibly make some notes of some things that you want to take with you into the forward test that could potentially work out better and provide a lot more profit, a lot more edge. I'll leave it there for now, and I look forward to seeing you in the next video.